Mark Gibson's Human Rights Channel. Accountant with designations CPA, MBA, CMA, ACPA, ASA, Australia. Enjoy learning!
So receivable management, no? So management is also part of your working capital management, no? Kasi 'di ba working capital is your current asset less your current liabilities. So all the accounts falling under your current asset also falls under working capital management. Receivable management is part of working capital management. It's just that there's separate chapter for receivable management to focus on different methodologies, no, in managing your receivable. Now, the objectives of the receivable management is, of course, to collect accounts receivable as quickly as possible without losing sales from high-pressure collection techniques. By accomplishing this goal, it encompasses three topics, no? So credit selection and standards, credit terms, and credit monitoring. Class ko napansin nyo, well, definitely, by managing our receivable, gusto lang naman natin makakolekta. Pero along with makakolekta, syempre we also input or include different collection techniques. Kaya napansin mo dito, meron high pressure collection techniques that will also sometimes cause you from losing sales. Paano yan? Imagine, yun ang mga telecommunication companies. Isang araw ka lang na delay, nandiyan na sila, tumatawag na sila. Di ba that's really annoying na fina-follow up ka na dun sa bayad mo dahil na-delay ka for a day. Pero imagine, minsan nagkakaroon ka ng problema with their service for not just a day. Minsan, a week pa. Yun yung hindi ka makakonect sa data. Lalo ngayon, kailangan mo dahil may online class ka. So, those kinds of high pressure collection techniques, especially yung mga telco natin, naka-outsource yung collection team. So it's really not sitting within their office, but rather outsourced to another group, no? So that's how important their collection process, no? Kasi marami silang transaction, kailangan instead of hiring people within the company, they just simply outsource it. But that's for postpaid, no? Syempre walang tatawag sa'yo kung naka-prepaid ka. Ano pa bang other example ng industry na mas madalas tumatawag sa'yo to follow up on your payment? Meron pa ba? Anyone? Yun lang naaalala ko eh. Yun yung madalas tumatawag pag nade-delay ka ng ilang araw. Wala. Sige, may gustong sumagot. Sige. Okay, 4 elements of credit policy. So number 1, credit period. This is the length of time buyers has before they must pay for their purchases. Credit purchase discount, reduction in price to encourage prompt payment. Credit standards. So it's the minimum financial strength of acceptable credit customers. So we have to employ the 5 C's of credit standards. So character, capacity, capital, collateral, and conditions, no? This also includes credit scoring. It's used with high volume, small amount credit requests. And of course, collection policy. Pa-mute na lang muna ako. Tapos pag nagtatanong ako, doon ka lang mag-unmute na. Para yung iba na magbe-base na recording, hindi rin maabala. Okay. So that's the 4 elements of credit policy. Plus, whenever you're trying to induce collection, no, yung kung gusto mo mas mapabilis yung collection mo, usually nagpo-provide ka ng credit discount, no? So say for example, if you pay within 10 days, you'll get additional 2% credit discount. So we call that credit terms, no? So it's sabihin natin 2/10 or n/30. So if you pay within 10 days, you'll get additional 2% discount. And if you pay within 30 days, of course, you don't get any discount. No? Okay. So what are the costs of maintaining? Maintaining yan, ha? Palitan ko na, baka magalit ka pa. Cost of maintaining receivables. Number one, cost of financing receivables, cost of collection, of course, and bad debts. Now, later on, we'll have problems to exercise problems to demonstrate this cost of maintaining receivables. No? Pero ito muna yung pag-usapan natin. Cost of marginal investment in accounts receivable. So it is the average investment in AR is equivalent to total variable cost of annual sales over the accounts receivable turnover. Pero napag-usapan na natin how to compute the AR turnover. Pero ulitin natin, no? AR turnover is equivalent to 365 over the average collection period. No? So AR turnover, again, this is the number of times you employ AR to generate more profit for the firm. No? So how to compute your marginal investment in AR? So that's average investment in AR under proposed plan less the current investment in AR under the current plan. So that's your marginal investment in AR. Multiply by the required return on investment. Required return on investment, this is your desired return. Or in case in other problems, this is also your opportunity cost, no? So that's the cost of marginal investment in AR. So kung napapansin niyo, ang ginagawa ko generally is to provide you with pro forma template or formula, no? Kasi from there, mas mahasa ka mag-solve ng problem. So you really have to lay down the template or the suggested formula first, no? So that's what we're going to do, no? So we're presenting you the template or the formula, and then later on we'll apply it with the problem. Okay. So credit terms, I've discussed this. So these are terms of sales for customers who have been extended credit by the firm. So let's now move to credit monitoring. So credit monitoring, this is the ongoing review of a firm's account receivable to determine whether customers are paying according to the stated credit terms. An aging schedule is a credit monitoring technique that breaks down accounts receivable groups based on their time of origin. It also indicated the percentages of total accounts receivable balance that have been outstanding for specified periods of time. So in real world, no, so at work especially, no, we monitor credit by aging, yun nga, aging schedule. And then along with that, we also provide, pag naririnig mo na yung provide, na pumapasok na sa yung financial accounting mo, we provide for bad debts, especially for those receivables aging 180 days or over, no? Or over 180 days. So, paano ba yun? Meron kang corporate policy. So, sabi na ang corporate policy mo, so we have to provide 10% for all receivables under 180 days or above. So, kung halimbawa daw ang receivable mo is 180 days na, kailangan mo na mag-provide at least 10% of that as bad debt, no? So again, yung 10%, it's case to case, depende sa company policy. Okay. Investment, hindi. Ito na is discussion problem number 1. So, kung nagbasa ka sa book, napansin mo lahat ng theory part, I just summarized it in my slides, and then now we'll proceed with the discussion problem. Ang annoying ito, pwede bang tumalis? Hindi na. Okay. So investment in AR and cash conversion cycle discussion problem number 1. I'll read the problem first, and then let's solve the requirement. No? Stop and Shop has an inventory conversion period of 60 days and the receivable conversion period of 35 days, payment cycle of 26 days. Sales for the period just ended amounted to one sales for the period just ended amounted to 972,000, while cost of sales amounted to 1.26 million. Credit purchases amounted to 684,000. Assume 360 days a year. How much is the investment in AR and how much is the cash conversion cycle? Okay. So, puntahan ko lang yung So, kinopya ko lang yung problem doon and then isa-isahin natin ngayon. No? So, question number 1, how much is the investment in AR? So, paano natin kino-compute? So, that's your sales multiplied by the receivable conversion period over 360 days. No? Ayan na yung sabi, assume 360 days a year. So, provided sa atin yung sales, kaya nilagay ko lang muna para at least alam natin yung mga given. And then the receivable conversion period of 35 days. So 360 is also given. So investment in AR is 94,500. Okay. Next, how much is the cash conversion cycle? So in cash conversion cycle, we have to identify these 3 elements. No? So number 1, inventory conversion. So inventory conversion is given, that's 60 days. Receivable conversion, 35 days. Of course, payment cycle of 26 days. So you have to add inventory conversion of 30 plus 60 plus 35, your receivable conversion, less the payment cycle of 26. So therefore, your cash conversion cycle is 69 days. Ito class, very straightforward. Hindi mo kailangang pag-isipan. The problem already provided the data. All you have to do is derive it from the formula. No, so that's problem number 1. Ito yung mas exciting, problem number 2. So in problem number 2, we're going to discuss about the marginal investment in AR. Pero earlier, we've talked about the pro forma template on how to compute your marginal investment in AR. So sabi natin, average investment in AR under proposed plan. Paano nga ulit yung pag-compute ng average investment in AR? Ayun. So it's total variable cost of annual sales over AR turnover. Multiply by the return. So yung difference doon, you call it marginal investment in AR, no? Multiply by the required return on investment. So you'll get your cost of marginal investment in AR. So going back to the problem number 2, isa-isahin ulit natin. Okay? So, the sales director of Sweet Bites suggests that certain credit terms be modified. He estimates that sales will increase by at least 20% and accounts receivable will be reduced to 8 times from the present turnover of 10 times. Bad debts, now at 1% of sales, will increase to 1.5%. Sales before the proposed changes is at 900,000. Variable cost ratio is 55% and the desired rate of return is 20%. Fixed expenses amount to 150,000. How much is the increase in profit from the sales? So that's question number 1. Number 2, how much is the cost of marginal investment in accounts receivable? And thirdly, how much is the cost marginal bad debt? O sige, isa-isahin natin yung requirements. So number 1, pinapakompute lang sa atin is the increase in profit. No? So pag sinabing increase in profit, kailangan natin kunin yung change between current and proposed. Pero in this case, nilatag ko na lang muna ano ba yung mga given. So sabi, ang sales daw, under the proposed scheme, so ito yung new scheme, sabi sales will increase by 20%. Ang AR turnover will be reduced from 10 to 8. So ayan, lagay lang natin bad debt. So from 1 to 1.5%. Given data also are follows, no? So variable cost ratio mo is 55%, pero tandaan mo naman na kung ang variable ratio mo is 55%, ang sales mo is 100%, meron ka ngayong CM na yung difference, no? So 45%. Rate of return, or sabi ko sa inyo, in other problems, this is also referred to as your opportunity cost and also your fixed expenses. No? Sige, isa-isay natin. So current, ito provided pa rin. Sales before the proposed changes is 900,000. Alam mo na kasi yung variable cost ratio, which is 55%. So there's a way to calculate that. So that's 900,000 multiplied by 55%, 495. So kunin mo yung difference, you'll get your contribution margin. That's 405,000. Of course, deduct mo yung fixed cost. Okay, hindi ka nakakasunod. Lagay ko na to, fixed cost. So that's 150,000 also provided. So you'll get your net income of 255,000. That's the current approach, no? Ngayon, meron daw changes, no? Sabi, yung change will increase your sales by 20%. So ginawa natin yung 900,000 multiplied by 120% or 1.2. So similarly, your variable cost is 55%. So that's 55% of 1,080,000. There's another way is just increase the variable cost from here by also by 20% as well. No? So that's another way to calculate your variable cost. So deduct the two. So you'll get 486,000 as your contribution margin. Also, fixed cost, no? So either current and proposed, fixed cost in total remains the same. Alam mo na yan, dun sa cost behavior natin, no? So that's 150,000 as well. So net income would be 336,000. So in multiple choice question, pwedeng itanong sa'yo, how much is the net income under the proposed scheme? Pero in this case, tinatanong how much is the increase in profit? So therefore, your answer is 81,000. So that's the difference between 336 and 255. So 81,000 increase or decrease? Oh, so isa pa yun, no? Baka kasi sa multiple choice, merong 81,000 increase, merong 81,000 decrease. So wag kang papalito doon dahil sayang yung effort mo kung mali lang din yung maseselect mo na letter. No? So 81,000 increase. Ha? Okay. So that's question number 1. Number 2, tinatanong na sa atin yung cost of marginal investment in AR. Pero dito pala, alam na natin paano yung pag-compute ng average investment in AR, di ba? So that's variable cost. Pero sinulat ko ulit para hindi nakakalito. Variable cost over AR turnover. So, okay. Para pag nag-review ka, mas mabilis. Under the current scenario, your variable cost is 495,000. I-dinedrive lang natin yung formula. And then AR turnover provided, AR turnover daw under current is 10 times. But it will be reduced to 8 under the proposed scheme. So calculate 495,000 over 10. So that's 49,500. This is the current under current scenario. 594,000 over 8. So that's 74,250. This is your average investment in AR under the proposed scheme. So deduct the 2. Makukuha mo ngayon yung marginal investment in AR. So that's 74,250, your average investment in AR under the proposed method, less the average investment in AR under the present method. So that's 49,500. So you'll get your marginal investment in AR of 24,750. Multiply by the rate of return, which is also provided. Sabi dyan, your rate of return, desired rate of return is 20%. So that's 20%. So you'll get your cost of marginal investment in AR of 4,950. Okay, so that's requirement number 2. Requirement number 3, how much is the cost of marginal bad debt? So calculate mo lang kung magkano yung bad debt under the proposed. So that's 1,080,000 multiplied by 1.5% kasi given, no? Sabi bad debts from 1 to 1.5 based on what? Based on sales. Of course, under the present method, that's 900,000 multiplied by 1%. No? So that's 9,000. Kung napapansin mo na, pag tinatanong ang margin, it's the difference between the two options or two methods in this case, no? So that's 7,200. So 16,000 from the proposed and 9,000 sa present scheme. So that's 7,200. Okay, go to number discussion problem number 3. So sabi natin, Shopstock company plans to tighten its credit policy. Higpitan naman daw. So the projected sales for the coming year are 50 million. The new policy will decrease the average number of days in collection from 75 to 50 and reduce the ratio of credit sales to total revenue from 70% to 60%. The company estimates that the projected sales would be 5% less if the proposed new credit policy were implemented. The firm's short-term interest cost is 10%. Sige, isa-isay natin yung requirement. How much is the average AR for the coming year using the present? Ito pala another example natin. Pero kasi another example pero different scenario. Kung napansin mo doon sa problem number 2, we ease, no? Mas ginaangan natin yung credit policy natin. So this time hinigpitan naman natin yung credit policy natin. So therefore, kung naghihigpit ka sa credit policy, ang sabi, it can reduce your sales, no? So this time, check naman natin yung magiging effect nito sa total sales mo. So okay, sige, isa natin. Sabi ng problem, sales will decrease daw by 10%. The company estimates also will decrease by 5% if the proposed new credit policy were implemented. Average days in collection, so from 75 to 50. Dito sila naghigpit, no? So sales to revenue is 70%, and credit sales to revenue is 70 and 60%, no? So you have your AR of okay. So kinuha lang natin dito yung total AR mo, no? So that's 35 million. So that's 50 million times 70%. Itong ratio na to, credit sales to total revenue. Nasaan yung other percentage? So that represents your cash sales, no? Kung 70 paano kasi kung halimbawa ang binigay ng problem cash sales is equivalent to 30%. Hindi mo na alam ngayon yung gagawin mo, no? But remember, your total sales is equivalent to 100%, no? Kung binigay yung 30% ng as cash sales, complementary yan. So therefore, the other 70% represents your credit sales or yung pinautang mo, no? Okay? So that's 35 million and 28.5 million. Average days in collection given naman. So kunin natin yung average AR. So average AR under the present is 7.29. Under the proposed is 3.95. So kunin lang natin yung difference. So makuha mo is 3.33 multiplied by the rate of return. So in this case, firm's short-term interest cost is 10%. So that's 10%. You'll now get the cost of marginal investment in AR of 333,333. But remember, in this case, meron kang loss of sales. Kasi 'di ba, from present na 50 million, ang sabi, the new policy the company estimates that the projected sales would be 5% less. So mas bababa yung sales mo. Therefore, we have to compute for the lost sales. No, actually, this is requirement number 3. So that's less lost sales. So your net annual benefit or cost is 2.166667 or cost, no? So meron kang annual cost dahil mas mataas yung amount of lost sales mo. Okay? So, actually that ends our discussion on the receivable management.
This has been your instructor, Mark Gibson. Thank you for learning with us. See you in our next discussion. Don't forget to like and subscribe. See ya!